Welcome to our second breakout session today, the crowdfunding session. My name is Melissa Bula-McGinnis with the WMarketplace, the co-host of today's event, and I am your tech lead for the session. I'd like to introduce you to the moderator today, Elizabeth Ahern from the U.S. Commercial Service, who will be moderating the crowdfunding session today. Elizabeth, I'm going to turn it over to you.
Hi. Like Melissa said, I'm Elizabeth Ahern. I am director of the U.S. Commercial Service Office in Peoria, Illinois. And I am excited to be here. As a business owner myself at one point in my life, crowdfunding was not in my radar at all. And I am so excited to know and to learn more about this option and to get exposed to the why and how of crowdfunding. So if that's what you're looking for, or you're in the right place. For the next 30 minutes, we will have an opportunity to hear from a funder, Jonny Price, who is with us, and also a client success story from Kate Isler. And it is going to be a conversation that will enlighten us in this area. In addition, the last 15 minutes of the program will be left for Q&A. Feel free to enter your questions in the chat, and we will go from there. For now, I'd like Jonny to introduce himself and tell us about his organization.
Yeah, hey guys, Jonny Price here at Wefunder. And yeah, as I mentioned earlier, Wefunder helps entrepreneurs raise capital from their customers and community, from unaccredited investors as well as accredited investors. Normally, when startups are raising equity capital, we do some loans as well on Wefunder, but normally when you're raising capital, you're limited to raising capital from rich people. Accredited investors is the technical term. Basically, it's the richest 6 or 7% of the population. And our founders said, that's not really fair. They were not accredited when they founded Wefunder, and they said, we want to invest in our cool friends' startups. And we shouldn't be prevented from being able to do that by the law. So they lobbied Congress, changed the law. And so now, as a founder, you can go to your customers and say, hey, would you like to invest in us, so that we can turn this food truck into a restaurant, or so that we can, raise capital to expand our, tech company. And you can raise $50K to $5 million per year on Wefunder. You can publicly promote the investment opportunity on social media and in the press, and in an email blast on LinkedIn, etc. And yeah, the last thing I'll maybe say, we're a public benefit corporation and a B Corp. So we're really excited about just getting more capital flowing to founders and making it easier for them to raise money and recruit an army of supporters. So that's what we're all about at Wefunder. Look forward to talking more about it.
Fantastic. Thank you for that introduction. And next, Kate, would you tell us about your organization? Introduce yourself, and also how you got started. You're on mute, Kate.
It is great to be here. And I'm so excited to talk about this. This is one of my favorite parts of the business so far. So I'm Kate Isler, and I'm the co-founder and CEO of the WMarketplace. And you've heard a little bit about us today, but basically we are an e-commerce site for women-owned businesses. We have merchandise and services on the site. And really, we got started in the spring of 2020 as a result of the pandemic. So I have been an entrepreneur for a long time, spent about 200 years in technology. It sort of feels like that. And during the course of my career, learned about International Women's Day and was so inspired by other places in the world that I lived that celebrated women across a lot of platforms. And so when the pandemic hit and women were losing their jobs and losing economically, I thought, there's got to be a way to remake the workplace and to take advantage of the trend with everyone online shopping. And as you've heard several times this morning, a couple of factors: women's businesses grow faster than the average business and receive less capital than the average business. And so we really set out to build a place that was an alternative to the big e-commerce sites, where women shoppers could invest in the communities they care about in a broad range of products and services, and that women-owned businesses had a friendly platform with a community that they could sell to their, to anyone, men and women, I want to say. So that's really how we got started.
Fantastic. Jonny, what does a typical client look like for your program? And what are some of the basic requirements for that typical client? Is there a down payment that is required, for example?
Yeah, typical client we don't really have a typical client. Typical client is Kate, a badass female founder. So there you go. But no, we really do. We are quite eclectic in terms of who we work with. So, a lot of what we do is tech companies, right, that are looking at raising from angel investors and VCs, and they're raising a seed round, or they're raising part of a Series A on Wefunder or a Series B on Wefunder. And we had a company raise $120 million from venture capital firms, Mercury Bank, and they opened up a $5 million allocation to let their customers invest alongside Andreessen Horowitz, one of the best VCs in the world. And so, there's kind of huge, success stories like that. And then, there's a coffee shop that's raising $70,000 to go towards, building out a second location, in Wyoming. So we really, and then, we're working with biotech companies, we're working with CPG companies, we're working with, as I mentioned, kind of Main Street businesses, movies, soccer teams. There's really a wide range of companies that have done Wefunder. And in terms of kind of stage as well, we can be the first money into companies. I was tweeted the other day, if you're doing a friends and family round, I don't really know why you wouldn't do that on a platform like Wefunder, and there's other platforms out there as well. It's just Wefunder's the coolest one. But if you're raising from friends and family, this is a way that legally allows you to publicly promote it on Facebook, so you can get in front of more people more easily. It's a very streamlined way of accepting the money. Everyone sees the investment contract that they're investing in. We've set up the bank account integrations and the credit card processing, and we roll the investors to one line on your cap table. And we put you in front of 1.5 million Wefunder investors. Typically, they account for, a third of the round, something like that. So that's just new money that you probably wouldn't get, or you definitely wouldn't get if you were trying to raise yourself outside of a platform. So it can be, I think, a really good way to do a friends and family rounds, all the way through to much, much larger rounds, as I mentioned. The average, just some stats, the average raise in Wefunder is 500K, a little south of 500K. The median is about 300K. Average investment amount is $1,000. So if you're looking at raising 50K to 5 million, you should check it out. Consider it as at least one of the options for financing that you're looking at.
Wow. Nice. So, Kate, what happened to make you realize that you were ready to search for outside funding?
Gosh, so many things. So when we started the business, we knew that, e-commerce is a very difficult business because it predominantly is B2C. And the space we were in, that, we've talked about unit economics this morning, and that is a difficult thing. I would remind people that Amazon wasn't profitable for the first 15 years. And right now they're profitable based on another product funding. AWS funds a lot of their profitability in the e-commerce site. So those are tough economics. So that's number one. But we also started looking at, the reality is I've been an entrepreneur and I've raised money. And, there is an accelerator factor in when you have capital, you can invest and push your business forward. And it is very difficult to do. First of all, with the stakes against you, you're a female. I was asked several times, the ages of my team, which was an interesting question, and, how we were possibly going to, make this happen. And so it's sort of stacked against you. And we're not a tech dependent, we're a tech enabled company, but we don't have a tremendous amount of IP on our own. And so all those things really led me to say, okay, we need to grow, we need to fund this business, and we need to continue on our mission, which is really to provide this platform for shoppers and women-owned businesses. And how are we going to do that without funding? And so we bootstrapped initially. We raised a pre-seed fund from one of our technology partners, which was a great thing. But, as we started to go and develop e-commerce, and we also have an e-commerce educational program, like a workshop program that is instructor led. And so we built that community, and we needed to fund that so that we actually had a solid offering for the marketplace. And so, we definitely needed capital to do that. I think people were coming in droves to online shopping, but to get your name out and to get people's awareness of your business, you have to push forward, and you have to look for creative ways to do that and to fund that. And so that really spurred us to say, we want to be a big business. I don't want to be a lifestyle business. I want to provide a huge opportunity for shoppers and women-owned businesses. So we need money to do it.
Yes. And Jonny, how important is the relationship between you and the business that you fund? So, for example, you can tell us a little bit about your client relationship with your fellow panelists, if you like.
Yeah, absolutely. I mean, I don't want to stretch this too far. I think hopefully we delivered a good experience for Kate, and we're supportive through the process. It's like a legal document that you file with the SEC called a Form C. And there's obviously a lot of kind of collaboration that goes into the page and the fundraising strategy and plan. But I will say, like, compared to, for example, if a VC invests in you, often they'll take a board seat in the company. And because they're investing a really large amount, they will tend to, I think, kind of go a little bit deeper in terms of the support that they're providing to the entrepreneur that's raising capital from them, especially kind of after the raise. Wefunder's involvement with the WMarketplace is like, hopefully we can collaborate and do cool things together like this one. But we're probably not adding as much value to Kate and the team as like, a VC that might invest in her. So I don't want to stretch it too far, but yeah, certainly through the process of running a community round, obviously we're experts in it. We aim to be super responsive and supportive to what founders are looking for and needing. But Kate should maybe talk to that, a more honest answer, or kind of authentic answer on that question.
Yeah, absolutely. Let me jump in and just sort of give everybody sort of the flavor for what we did. So Jonny mentioned a little bit earlier about the administration and the managing of the raise. So many of us know that fundraising is a job and a half. People say it's a full-time job. It's a job and a half, plus you're trying to run your business. And so it is huge resource drain on everything. And it's sort of you don't want to be defocused on your growing business when you're trying to say my business is growing, but I don't have time to actually grow my business because I'm fundraising. And so you're in a little bit of a catch-22. And so what we found most definitely was, the administration work that Wefunder picked up from us was spectacular. I mean, it was to have that partnership. And we did have a great partnership in terms of, we went through the online process, and then we had an account person who was fabulous, who said, here's some ideas on what you should do. And this is what we found to be successful in your slides and successful with filling out your Form C. Form Cs are complicated. It is a securities exchange document. It's a very big legal document that is expensive to have an attorney do. It is, difficult to understand if you're not an attorney or a financier. I am not, my co-founder is not, but we really relied on Wefunder to help us through that process. It's very transparent. You are then being, you have very little worry. You have to disclose everything. So when we talked just in this last session with Daintree, and they were talking about the finances you need to provide, you absolutely provide that to Wefunder. In fact, you have to have an audit, an accredited audit to get on the platform. It was fabulous because they helped us find audit partners that were cost effective to do it. And so we went through that process feeling really great because, they had been a partner, not only in terms of here's a platform that processes all the payment, but here's a partner that picks up and tells you, these are the 3 things you need to do, or this is what's worked in the past. So we weren't alone kind of knocking on angels' doors, which we did some of as well. But I have to say, the engagement that we had and the support that we had from Wefunder was fabulous because they've done it so many times. So that was super helpful, and it was cost effective. And, when we go back and look for things, again, I'm an entrepreneur, like in the true sense of the word. When people go, do you have that safe form? What did you do? I can go, oh yeah, it's in my Wefunder file, or, it's all right there. And so it makes the process very easy.
One thing to just quickly chime in, a couple of things on what Kate said. Firstly, just on the audit thing, if you're raising more than 1.2 million, you need audited financials. Going back to either the incorporation date of the company, if you're a startup, or if you're older than 2 years old, then 2 years of financials. If you're raising between 120K and 1.2 million, the financials need to be reviewed, which is a little bit easier than audit. And then if you're raising less than 120K, which a lot of companies on Wefunder do, the financials are just self-reported. So sometimes an audit can be quite expensive and time consuming. And so, Kate got it, but if you're raising more money, you need that. But if you just want to raise 100K or 200K, you don't need an audit. And then just really wanted to double down on what you said there, Kate, which is, fundraising is hard work. And, most companies on Wefunder, there've been a couple of companies on Wefunder. Replo is a good example. They had 1 million users. They launched, they sent 1 email to their customers, and they raised $5 million in a few hours. That is extremely rare. Most companies on Wefunder, we hope we can make it a little bit easier for you in a bunch of different ways, but it's still a grind. It takes effort. You get out what you put in. So commit to it, dedicate the time to it, see this as your full-time job, desperately try to carve out time in your day when you've got to focus on this. And if you do that, then hopefully, good things will happen. But the biggest reason I see founders fail on Wefunder is they think, oh, we'll just launch it on Wefunder and watch the Wefunder investors roll it, or we'll just send a Facebook post about it, and then we'll be fine. And it's like, no, you got to hustle, you got to work it, you got to talk to people individually, you got to email them, text them, call them, meet them, and of course now you can market it, so that can pour fuel on the fire. But it really does take hustle and grind, and just commit to it, and then you get out what you put in.
Wow, thanks for clarifying that and to opening the helping us to see the picture of what goes into this relationship, and how Jonny, you support, and Kate, what you need to move forward. How did you hear, Kate, about this type of funding?
There's a couple of things. One, we have a female attorney that said, hey, have you guys thought about this? And so, we kind of went and checked it out and looked across lots of platforms, and really felt like, we were getting twice what we put in to do something like Wefunder. You know, the crowdfunding, because of the administration that we just talked about, and because they had done it and could point us in the right direction, but because we leveraged it as a marketing tool for us in many ways. And I think, you know, Jonny, you're absolutely right. We marketed to that platform, most definitely, because, you know, our mission is, you know, to be the economic engine for women. And so when you talk about that and you talk about, you know, here is how we are pushing women forward, we gave our customers and everyone who was supportive of this the opportunity to invest for future equity for $250 or more. So it was a real, you know, it's sort of in our mission, because women gain economic prosperity via investment. You know, that is the quickest way to gain economic prosperity. And so we were very focused on, you know, we want to let people in to join us for that and to join in our success and to give them that opportunity. And so it was just made sense for us. And we were, you know, as Jonny said, we raised almost 1.5 million. So we raised a lot of money, which we were looking for, versus, you know, just the smaller crowdfunding that you hear about. And we did it very intentionally to give us runway as we built out, again, not only our e-commerce, but our e-commerce workshop program that has been very successful. And so we feel like, you know, it was the place to get that, you know, that benefit, because it is a full-time job or job and a half to say, let's run the business and let's fundraise. And so we could market both of those positions at the same time to be successful at.
Wow, great. Jonny, do you require a business plan?
We do not require a business plan. We want to be a pretty open platform on Wefunder. So if you're listening to this and you want to give it a whirl, you can go to wefunder.com/raise and you can be live with a page where you can start sharing with investors in 30 minutes after, you know, this session. It's very easy. We don't want to be kind of the gatekeeper. A part of our mission, right? It's like when you have gatekeepers that decide, you know, which entrepreneurs like Kate are worthy of getting capital. You know, sometimes they make good decisions, right? But sometimes we think they might get it wrong. Like, for example, how little capital goes to women founders and founders of color. And right now, about 80% of venture capital goes to 3 states, California, New York, and Massachusetts. And we think that sucks. And that's a result of a system where you have kind of gatekeepers who are, you know, making these decisions, and they're all white men living in Sand Hill Road. And so, you know, we want to kind of say there is wisdom in the crowd, and we want to let founders raise capital from their crowd. And we don't want to be another gatekeeper. So we're a pretty open platform. We don't require a business plan. There's a page on Wefunder where you can basically upload your story. Usually your investor pitch deck is pretty common, but you don't even need that. There's a place where you can upload a video. One thing I will say is we don't have a requirement for a business plan, or, you know, a certain amount of revenue, or 7 years in business, or whatever it is. But obviously every investor will have their own requirements, right? So if I sent my Wefunder page to my mom, she would probably invest $1,000 in me and without reading it, because she's my mom, right? So, you know, like, she will have very loose requirements. But maybe if there's an angel investor that's looking at investing 50K and really cares about, you know, getting a financial return, then she might have some more strenuous requirements in terms of what she wants to see for me. And certainly, as Kate mentioned earlier, the SEC require financials for the business, historical financials, cash flow, profit and loss statement, balance sheet, that you do have to file with the SEC. We help you to pull that together. So that's a legal requirement, but in terms of business plan, not a hard requirement. Every investor will have their own criteria that they're looking for to get them over the hump to invest their hard-earned money in your business.
So besides the story, is there anything else that you need to see in your page, Jonny? You know, where
so definitely check out I mean, Kate, do you want to put the link? Maybe you did this already, but put the link to your Wefunder page in the chat. I think that would be cool.
Absolutely. We can absolutely do that. It's a fun page. And I would say, one of the things that I don't want to misrepresent, and I think that Jonny was implying this. When you're pitching, it's just like pitching to anyone. It is, this opens the opportunity to pitch and to gain investment from non-accredited investors, but you have to be just as buttoned up and know what the heck you're going to do. And I think, that is also, you can think about the level of funding you're raising, and that will probably dictate that, or the longevity of your business, or, all kinds of different factors. But this is a serious fundraising opportunity. And so it is, we had, most definitely a pitch deck. We had use of funds very well outlined and what we were going to do. And so it isn't a shortcut to that. So I want to make sure that we don't misrepresent that, because it is a way to gain access to investors that are not accredited, but you still have to have the appropriate plans in place, and do, represent your company in the best light that you're worthy of investment, no matter how much. And so I think that that's a really interesting piece. But it's, but it is more engaging. And so we had a couple of really amazing things happen. So we had people come offline and talk to us very specifically and get more information and invest larger amounts, which was fantastic. And those ended up to be accredited investors. And I will say one of the highlights of our Wefunder journey was we were contacted by our Wefunder person and said, we have an entity that wants an introduction. Are you interested? And we were like, sure, why not? And ended up doing a due diligence call with these folks before they've looked at our business plan and all our financials very specifically. And then it was revealed that it was Damon John. And so then my co-founder and I got to do a hot seat with Damon John, because he found us, his team found us on Wefunder, and it was fantastic and super fun. Scary as anything. I'm telling you, you have lots of investors, but you go, oh my God, Damon John, that's a big deal. And so that was a really fun piece, because that is the marketing piece that you get to do. And it's broader, so that when you're knocking on doors and submitting online applications to 1 million angel funds, you don't have that ability to build your brand and to build some buzz about your company, which is ultimately, from a consumer facing company, ultimately we want people to go, let's see, we can go to that big online reseller, or we can look for alternatives, the WMarketplace, and so we want it to be very mission driven. And so that was fantastic. And so, I don't want to misrepresent that. I haven't to everyone. That's a great experience for us.
Can I say what?
Yeah, go ahead.
Can I say one more quick thing? So I just put a link in the chat. I would encourage everyone to click on that link, because this for me is what Wefunder is all about. And I'd be curious on Kate's kind of experience of this, but this is my favorite thing about Wefunder. So every Wefunder page, when someone invests and they go through the checkout flow and they see the terms and they say, yeah, I'm going to invest $1,000, and then, okay, thank you, confirmed, right? And then there's a place, do you want to leave a note for the founders of the WMarketplace? And not everyone does it, but it looks like there was 77 investors who did this on the WMarketplace page. And if you read through some of them, like Maria Lewis here says, because women rule the world. Lemworth Grandson says, I believe female entrepreneurs are being underserved and underrepresented. Jesus Hito just says, good luck. Nagpangi Thomas says, hello, Kate and Susan. I believe in your mission and appreciate that you continue to follow it, and others have encouraged you to deviate from the plan. Paul says, I believe in businesswomen and their drive and passion to get things done. So like, this is the magic of Wefunder. Like I was chatting to this one founder, Tyler Hayes. He has this really cool company making prosthetic limbs. And he raised 5 million on Wefunder. And he was saying that normally when you're fundraising, it feels like no. Because even if you persuade one person to write you a 50K check, you have to knock on like 50 doors where you hear no to get one yes. And he was like, fundraising on Wefunder feels like yes, because the people that don't invest, you don't see that, because they come to the page, they choose not to invest. But the people that do invest, you're getting like lots and lots of emails saying, hey, this person invested, this person invested, this person wrote you an encouraging message. And so it's a really kind of community-based, relationship-based way of, raising capital and bringing in your customers and community to be stakeholders, financial kind of investors in the business. And that buzz page, which is like, on every single Wefunder page where investors are writing notes, that for me is like the magic of this movement that we're trying to build here.
Whenever you're having a bad day, fundraising, that's exactly what you do. You go back and look at that and go, whew, okay.
Yeah.
Fantastic. So how can businesses connect with you? I guess the best way,
so I just put my email in the chat. It's probably the easiest if you want to email me. I can put my LinkedIn and my Twitter as well. I'm usually pretty responsive everywhere. So feel free to hit me up directly. Wefunder.com/raise has some great information if you want to, learn more and potentially just get going on launching on Wefunder.
Perfect. Well, we are in the Q&A part, of the program, and there are a few questions that have come through. Not sure if you guys can see them, Jonny and Kate, or
Elizabeth, would you like me to read them for you?
Sure.
Which credit score is used for crowdfunding business or personal?
There's no credit score that's used.
Okay, and then this question is from Dana for Kate. Kate, how have you raised different types of funding, including crowdfunding, loans, investors funds, or anything else?
So I will leave it to the WMarketplace funding. We initially raised a pre-seed that was a purchase of equity. So that was a straight purchase of equity right off the bat. We have a small business loan, an SBA loan, very intentionally so that we could start a credit record, because we found it very difficult, even starting bank accounts with people wanted references, and we're a new business. We struggled with that quite a bit. And so we found it was really easy to take out a very small business loan, pay it off regularly to make a difference there. And then the crowdfunding has been our very big fund. And that, we've done that on a SAFE, which is a simple agreement for future equity. And so that is not a debt fund. That is meaning that we are holding funds and people will get awarded equity based on their investment once we raise a priced round. And so that is a much deeper conversation that I am happy to have with people. If they want, reach out to me, or I can send you some resources to find out what the SAFE is all about, because it is a little bit complex.
Okay, so from Carolyn, also please explain what it means to raise capital. Do I need that?
I'm happy to, Carolyn, it depends on what you're doing with your business, capital. You have to be aware that when you're raising capital, either on a debt or a loan, or, however you're doing that, you have to be thoughtful about why you're raising it and what it's going to fund and the difference it'll make in your business. And so that's something that you have to decide. Nobody can do that for you. And I would weigh it out and do scenarios in terms of, it's like, if I had an additional $100, what would I do with that? And kind of go through the scenario.
Yeah, one thing I'll say, I don't think Wefunder is really good at, or aspires to be good at, helping entrepreneurs think through what is the right capital strategy for them, and how much money should I raise, and should I raise, and even like, should I do a safe, or should I do a price round, or a loan, or equity, etc. We can certainly advise on that, but it's not really our forte. We're really good at helping companies raise money through crowdfunding and being the platform to do that. We're less like experts in helping figure out exactly the right capital strategy for you, not least because we don't know enough about you and your business. So if you need help on figuring out, okay, what's the right capital strategy? What's the right strategy for me to raise money? When should I do it? How much should I do it at all? On what investment structure, debt or equity should I be raising on? I would say, talk to other founders, other entrepreneurs that have done a similar thing and are like a few years ahead of you, and just go find like 5 or 10 of them and like just take them for coffee and talk to them. That's probably the best advice I would give on like getting advice. But then also, obviously, there's a lot of great organizations that can give you advice as well, and advisors, that kind of thing. But I always think the best one is like talk to founders that have trodden that path.
They'll all talk to you. We will all talk to you because we've all been there.
Okay, another question for Kate. Kate, do you still offer instructor-led program for e-commerce? Thank you, Shayla.
Absolutely, we do. In fact, we're even building it out. We have 3 different programs depending on the stage of your business. So we have one that is for really geared towards new businesses that are just getting started in e-commerce. We have another one that is geared towards businesses that are growing towards or within e-commerce. And then we have a third one that is scaling across multiple channels. And we talk about really things that are important to those businesses, from tax obligations to packaging to customer experience to, what is the current trend in terms of product listing? How do you analyze your best channel and the impact of that short and long term? So all kinds of things. And what we're finding is that women want an instructor guided course that provides them a cohort and a community versus watching thousands of hours of on-demand videos. And so that has been very effective, because part of the WMarketplace is we're all in this together. We have just over 600 businesses on the platform right now and about 7,000 products. And so we have resources within our community to deliver expertise at different levels. And so we've developed that into a curriculum and worked with women-owned training partners. So women-owned businesses that do that, and sort of, we're building an ecosystem to help each other. And as Jonny said, talk to other entrepreneurs, because we are all willing to jump in and help and to give you insight into our experiences. So absolutely. And so reach out, and I'm happy to tell you more about all those options.
Okay, fantastic. The next 2 questions are situational, specific questions. So the first one is from Krishna. We are a tech, AI, and analytics data service company. Are services suited for crowdfunding? What would we have to demonstrate or showcase to build interest?
Yeah, so I think the sweet spot for investment crowdfunding, what we do in Wefunder, is companies with a large audience, right? Because then you can go to that audience and they can come in and invest in you. And so from the name and the description, my guess would be you don't yet have a huge audience. If you do, then it's a good fit. If you don't, then it's like not in the sweet spot. But I would still say that, Wefunder can help founders, even if it's B2B, right? Even if it's enterprise SaaS, even if it's biotech and you don't have a big audience yet. I still think we can help people, make it easier to raise capital, because now, you can publicly promote the investments, and you can raise from unaccredited investors in your network as well as accredited investors. And so, yeah, it kind of really depends a lot on the situation. B2B tends to be less in sweet spot, but certainly we've helped many B2B companies raise $1 million and be very successful. So certainly worth considering and looking more into. Okay, next question
excuse me if this was already answered, but is some sort of perk offered for donating to a particular cause? For example, we are in the health and wellness products world and we're looking for funding, would be offering some of our products as an offer for donations. Thanks.
I can talk to this one. So it's really, really important. It's kind of going back to what Kate said earlier to be very kind of clear in the terminology, right? So this is not a donation, right? When you're raising capital on Wefunder, you're not raising donations capital, you're raising investments capital. People are investing in you because they believe in you, but they believe in the cause. Like there's some cool, like, you know, mission orientation. It's not just about like green dollar bills. But at the end of the day, like this is not GoFundMe, which is donations. And this is not even Kickstarter, which is kind of basically, you know, sales. It's basically kind of revenue. This is investments. And so people are looking at investing in you because they hope to make a financial return. So if you're borrowing money, if it's a debt offering on Wefunder, you've got to persuade them that the interest rate that you're going to pay them on the loan is greater than the risk that the loan defaults because the business doesn't work out, right? If you're making an equity investment, which is what Kate's was, SAFE is a flavor of equity, then you've got to convince them that the valuation of the company now is going to be greater in the future when you get acquired or when you exit. And so, yeah, you've basically got to try to, it is an investment. You've got to persuade people that they're going to make money by investing in you. And there's other crowdfunding options. GoFundMe is donations. Kiva, where I used to work, I started the US team at Kiva back in 2011, and I ran that for 7 years. And we were making 0% interest microloans to entrepreneurs. So check out kiva.org, kiva.org/borrow, KIVA. I'll put the link in the chat. If you're borrowing a smaller amount of money, also crowdfunded, 0% interest, really great option for you. And then this Kickstarter as well. Wefunder is investments, really important distinction.
Okay, we have a few more questions. We'll try to get to them. Kate, the next question's for you. I think you could even touch on the question afterwards, which is this, do you have an attorney helping you with putting together the document for the SAFE, etc.? And with crowdfunding, isn't the pitch deck very important? What main aspects should be included in the pitch deck?
So yeah, I can touch on both of those. One of the advantages of going with Wefunder is that they help you to file all the forms that you need to. They do not decide on what investment vehicle you use, meaning is it a SAFE or is it a convertible note, or what is the actual form of equity that you do? That is something that you need to decide, and oftentimes you do that with an attorney. And so yes, we did, but the filing of it, we used the resources with Wefunder. So it was a little bit of a mixed bag to do that. And again, that goes back to what you're going to do with the capital and what your business situation is. And that's probably best individually with your attorney. And so the second piece of that is the deck. Gosh, every part is important. And I'd say, you know, sort of the famous quote is, if I had a longer time, I'd write you a shorter note. Brevity is key, but effective brevity here is, you know, you have to get your point across in a very short period of time. So like 10 slides or less, with key why you're in it, what you're doing is a really important piece of the deck. When I first started in my entrepreneur journey, was like, how hard can this be? It's 10 slides. And I'm going to tell you that it takes months to get those 10 slides correct. Always pitch it, always talk about it, always present your deck, and listen. Listen to what people say, regardless of what you think. Oftentimes feedback is like a gift, and you will continually refine, and you have to have a deck. It is so important to get that point across, because the video on Wefunder is key, because it's you. It's the opportunity that you have to present yourself. And I hope you watch our video. I have to say, my co-founder and I did it, and we left the bloopers in because it's a little short video, but it took forever. And so it tells you a little bit about us. But then this is a serious equity investment. And so we put the details in the deck. Phew.
Oh, thank you so much. Wow, so much information and so valuable. Thank you, Jonny of Wefunder, and Kate of the WMarketplace. This has been a phenomenal panel, and I'll turn it over to Melissa.
All right, thank you so much to our speakers. What a great breakout session. There was lots of questions that are asked. We'll do our best to follow up and answer those questions after, especially those very specific to your business questions. So yeah, definitely to touch on what Kate was saying earlier, crowdfunding was very exciting for WMarketplace. We did have a successful raise, and we can thank Wefunder for that guidance. And so and you know what's neat is as each investment happens, it's pretty neat seeing that belief come in from those investors in your business. So something to consider. With that,